So they announced they're going to buy Foot Locker for about $2.4 billion. Their stock fell about 15% on the day. Foot Locker went up 85% on the news. So they were the clear winners there. But under the agreement for Foot Locker, shareholders there can receive either $24 in cash, which is a roughly 66% premium to the average share price over the last 60 days, or they can receive 0.1168 shares of Dick's stock. I don't know why you would take the stock option here. I think I would take the cash hands down if I owned Foot Locker stock. And the interesting thing, though, is I bring up with Foot Locker is a huge premium on that day, right? As I said, it was up 85%, but the stock has been atrocious. Even with that deal, year to date, the stock for Foot Locker was up around 10%. Over the last 2 years, it's still down close to 40%, even with that 85% increase. 10 years, down 60%. Again, even with that 85% increase. I mean, the stock has been terrible. So I'm not sure what Dick's saw here, but I think this could be a big mistake, especially with that debt load.
And I think you said the offer was like $2.8 billion was the number?
2.4.
Okay, 2.4. Well, I just looked at the balance sheet real quick. Cash and equivalents, $1.7 billion. So that means...
Here's debt.
Yeah, if everybody... I don't see, again, why anybody would take the stock, I don't get it. But if everybody took the cash offer, they're going to have to raise their debt even more than what it is. And I want to say, gee, I like Dick's Sporting Goods, but I don't like that debt level, and that would be enough to tell me, like, no, I think I'm going to stay away from this company.
And the interesting thing here is the CEO came on because I was like, what are they going to do with it? And they're actually going to run the companies as two separate entities. Generally, when you do that, you're going to have accretion and you're going to run the companies the same, essentially. But the thing that I worry about is Foot Locker's international. It's also a totally different demographic than what Dick's Sporting Goods is used to. So now you're going to have to learn how to market to a different demographic. You're going to have to learn how to operate within a mall. You're going to have to learn how to operate internationally. I mean, it just didn't make sense to me. The only thing that is a positive here is they both have big kind of contracts essentially with Nike. Well, now Nike maybe is going to have to bend a little bit to Dick's since they're going to have a huge order book essentially. Right. That's the only thing I see as a positive. I think I would be a seller of Dick's at this level.